You said don't fight the Fed. I mean, that's a mantra, an adage that has put us all in good store in the past. If you did fight the Fed, you quite often lost money. But why do you say that wisdom doesn't apply right now?
Actually, I'd say that right now, for markets, it's evidently not applying, because at different points over the past several months, markets have consistently fought the Fed in terms of how many rate cuts they're expecting. The Fed keeps telling us they're not cutting rates. I happen to agree that the Fed likely will not cut rates, but markets have been, I mean, we are seeing in today's numbers again, that volatility, but some of those rate cuts, which were being priced into the second half of the year, being priced out. I still think it's too optimistic. Fed's likely to stay put.
But maybe the market is fighting the Fed because they don't believe the Fed. I mean, the Fed lost a lot of its credibility early on, didn't they? They kind of got it wrong on inflation. They then sort of started hiking rates too late. Maybe they're worried that they're going to keep on hiking rates for too long. And then you also hear from all these various Fed speakers who are all wheeled out in the name of, you know, communication and transparency. And it just ends up confusing everybody because everyone's got a different view and they don't know either.
I think I agree on that to the extent that there are different areas of uncertainty. One is, do they hike again? You know, on balance, it looks like they will pause. Is it a pause or the end of the cycle? All of this to me is a little bit less important than are they going to cut? And yes, they're data dependent. So the real question is the market actually looking for true weakness in the economy, or are they really pushing the Fed to deliver the type of rate cuts which support asset prices? And I tend to believe it's the latter, because if I look at spreads in risk assets, they don't reflect massive panic about a deep recessionary environment coming up. So I'd say, yeah.
Do you think that Jackson Hole in August could be the forum and the platform that could signal a policy shift? And if so, then what would be the likely response by the fixed income market, Sonal?
So I actually see Jackson Hole not so much as signaling a policy shift, but actually signaling policy commitment, because I don't think it's very likely that between now and August we will get sufficient disinflation for a Fed pivot. So this is going to be the point at which the Fed potentially can reiterate what it wishes to say and do, because Jackson Hole does carry that weight.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.